I'm doing this show without a laptop for the first time ever. I just want to be able to show you guys my versatility.
Did you leave it at home?
Yeah, I'm going out to dinner tonight. I want to schlep a bag on my back. What? Oh no, I still got. You're worried. In case you were worried.
This is like the Mad Money special effects board.
You know what? It turns out, John, I think I do need that laptop stand because I'm going to put my phone up, prop it up.
Prop it up.
So, dude, you look like $1 million. You do. Nobody else is saying that to you? You look great.
I guess it's the cold wind in Canada.
Is that what you got? You got a windburn, but it looks like a suntan.
Yeah, right.
You catch a few 10 baggers.
Well, you've been outside. You've been outdoors a lot, so it's understandable.
Of course.
It was so goddamn windy last night. My house is creaking.
It was actually colder here today than it was in Toronto.
Dude, I hate this. I hate a lot of people like the fall. I despise.
So I actually like daylight savings time. I like that it gets lighter earlier, but the nighttime darkness. Right now. What do you mean? Yes, it is. In the morning, it gets light earlier.
No, the morning just starts earlier. It doesn't get lighter earlier.
We're saying the same thing. When you wake up, it's light.
No.
But getting dark at 4:30 is depressing as shit.
Yeah.
Like it actually chemically fucks you up.
Well, I like to go to Drake's early morning, so I actually prefer like
the sunrise
7
above.
a.m., 6:45 a.m. And I actually preferred it when it was like darker. All of a sudden, it started getting.
Do they have restraining orders in Toronto?
When I first told my wife I was doing this, because my 16-year-old son said, you know, this is a surefire way to get attention. You need to do this.
He was right.
He was right. He was totally on the mark. But she was like, you can't do that. You know, the police are they're gonna arrest you. You're gonna be on the front of their cruiser.
Do you live in this? Do you live in that neighborhood?
I'm like 5 minutes away.
So basically, yeah.
But I'm not in one of these mansions that Drake said.
Not yet.
But no.
Right.
But my wife was all worried.
Yet.
My wife,
Opendoor goes to 82, you will be.
Well, my wife was like, you know, if you do those videos, you can't show his house number. Because then people can find him. I was like, honey, he's on the Kendrick Lamar album. Like it's the Google Maps like photo of his
It's literally the album cover or the cover to the single is Drake's mansion with a lot of not Amber Alerts, but whatever those. It's not.
Really?
It's really bad.
Oh my
God.
God.
It's very bad.
Straight from Google Maps.
So wait, are you doing that every day? And what are you doing?
Today was day 80.
What do you do?
Here, live from New York City.
Stop. Let's not step on the show. Well, we're gonna get to all that.
All right. So you
guys?
promised multiple 10 baggers for us today?
Yeah.
Yeah.
How many 10 baggers?
We're going after 100 baggers here, Michael. Come on.
That's my bad. 100. I'm sorry.
100 baggers.
I was thinking small.
10 baggers.
I was thinking small. You know, when you tweeted the Opendoor, was it 80 cents? I swear to God, I almost bought it. I said, this guy, he's got something.
It was 88 cents.
88 cents.
The moment I tweeted. I bought it earlier. I bought it like 70.
What's the price today?
$7. Well, it was $7. I think it dipped.
But it got to 10.
Got almost to 11.
Are you?
Nobody can be mad at you because.
Oh yeah.
It
keeps going down.
Nobody has the right to be mad at you. I should rephrase that. Has the right to be mad at you because it 10 bagged.
Yeah.
You're saying it's 100 bagger, but I'm just making the point. Like it did 10 bag. Like people that bought it had ample opportunity to take a profit if they wanted to.
I think
you're not their financial advisor.
I think at the height it was like 20 bag.
Wow.
Yeah.
Unbelievable.
Not bad.
But no, people still get mad. It drops, you get the hate tweets. You get the hate DMs.
Wow.
Like, tweet something. Get the stock price up.
Respectfully. A, welcome to my world. B, this is the lifestyle you have now chosen.
You made your bed.
That's right.
I think it's gonna work out for you. I actually have some ideas for you, but we'll do the show. All right, John, what episode are we doing here today?
Josh, we are on the Compound and Friends episode 2.
Today's show is sponsored by Victory Capital. Not all growth is created equal. While traditional growth investing focuses on revenue expansion, the Victory Shares Free Cash Flow Growth ETF, ticker GFLW, tracks an index targeting something more powerful, profitable growth. GFLW provides exposure to high-quality, large-cap U.S. companies that don't just grow, but generate free cash flow efficiently. The Victory Shares team believes strong free cash flow indicates a high-quality company because it demonstrates a business's cash-generating ability after all expenses. The ETF's index follows a process, screening companies for strong free cash flow, return on invested capital, filtering for the highest growth prospects, and finally, weighting towards companies with positive momentum. Explore how GFLW could fit within your portfolio at victoryshares.com. Investing involves risk, including possible loss of principal. Victory Shares ETFs distributed by Victory Capital Services, Inc. Carefully consider the fund's investment objectives, risks, charges, and expenses before investing. For a prospectus or summary prospectus containing this and other important information, visit www.vcm.com/prospectus. Read it carefully before investing.
God. Ladies and gentlemen, welcome to the biggest investing podcast in the world. We are super excited for today's show. We've been talking about it all week in giddy anticipation. We have a returning champion back in the house with us.
Fourth time?
I don't know. You've been on a bunch, but you're one of our favorite. You know, you're one of our favorite people. And quite frankly, what I've watched you do over the last couple of months has been really exciting. And I did openly ask a question that I know you weren't thrilled with on the show about your activities, which I'm going to give you a chance to tell me.
You weren't the only one.
All right. I'm going to give you a chance to tell me why I'm an idiot. But all things considered, it's really cool to watch this career renaissance that you're going through. I think it's awesome. And we're going to get into
for the old guys.
All right. Guys, Eric Jackson is the founder and portfolio manager of EMJ Capital, an AI-driven, of course, tech-focused investment firm he launched in 2017. Over the past 6 months, Eric became widely known for leading the Open Army. Shout out to the... Wait, you just turned me off.
I did nothing.
Yeah, you did. I'm plugged into you.
I'm doing nothing.
I'm plugged into you. You did something with your volume.
Duncan, John?
We need sound.
You just turn your volume down.
Oh, because I'm getting beeps. That's why.
Okay. Do not disturb on your phone.
All right.
Still didn't work.
It's not working. John,
come over here.
keep going.
All right. Anyway, let me keep reading your intro. Known for leading the Open Army. We are not AI driven, in case you couldn't tell. A grassroots investor movement supporting Opendoor, helping reframe its narrative and driving one of the most dramatic turnarounds in the public markets. Eric is also the creator of Rising Dynasty, a growing community of investors focused on power law outcomes, conviction, and long-term asymmetric opportunities. Can I ask you a question? If you're in the Open Army, are you also in Rising Dynasty, or do you have to buy each of those memberships separately?
Yeah, I think you get
two movements
automatically entered into Rising Dynasty if you started in the Open Army.
All right. For Jesus Christ, one movement was good enough. I'm just saying.
It turns out we were bigger than Open.
All right.
We were bigger than
It's
Open.
about more than just Open. I got that.
Yeah.
All right. In December, Eric will be launching EMJX, a Gen 2 multi-asset AI-driven digital asset treasury company where he will serve as chairman. Prior to founding EMJ Capital, Eric managed capital at Ironfire and Spring Owl event-driven partners, where he invested in companies including Yahoo and Viacom. He holds a PhD in management from Columbia University. And I'm sorry, that's all the time that we have, ladies and gentlemen.
Wait, you're doing the digital asset thing? Are we going to talk about that later?
Yeah, well, let's do it.
All right. So, let's not do that first. We gotta start with the general market, because I think this is the week that something materially in the narrative about AI investing has sort of made a left turn.
Mm-hmm.
And Michael suggested we do this in order, which I think is a pretty good idea. The OpenAI thing, I described this to Kramer. It's the biggest player on the board, and yet he's still not in the movie. Like, in other words, it's like Kaiser Soze.
Mm-hmm.
Like, he's on everyone's lips, Sam Altman,
mm-hmm.
on everyone's minds. He's doing deals with everyone, but he doesn't have a public company. So, yeah, we get some financial information, but it's selectively distributed.
Very confident in my assertion.
You got it?
Confident in my
All
assertion.
right.
Back.
All right, let me do the intro again. and so stop him from whatever that was.
He was doing it.
Okay. All right. So the point is, given how the centricity of OpenAI to the whole AI investing theme, it's a pretty remarkable situation that it's the only one that's not public. That's like materially, Anthropic too, materially important to all these public companies' earnings outlooks,
Right.
and CapEx outlooks,
Microsoft,
and future
Amazon.
revenue growth. And it's a wild situation. before we get into the chronology of what took place over the last week, do you feel the same way that it's really a situation that we've never seen before? Or maybe I'm wrong about that.
No, well, like, as a public markets investor, I hate that all of these companies like Stripe and OpenAI are still sort of clinging on to this Zuckerberg. I think who was the original guy who inspired this idea of just staying private forever. And I never thought I would see the day when a company would hit $1 trillion in valuation before IPOing. And yet that seems like
that literally might happen.
Yeah.
Now that couldn't have happened in prior eras because there used to be a rule, maybe it still exists but not being enforced,
right,
that if you have more than 500 shareholders, you are de facto a public company. Therefore, you must file financials at the SEC and be a public company.
Right.
Does that law still exist? We're ignoring it, or
I think we are. And
how
if it's a law, they're not ignoring it.
They are, because these investors are in a fund.
Oh, the SPVs.
So they're
of
counting
SPVs,
the
of
fund
SPVs.
as one shareholder.
Right.
But
That's
also
how they get
access
it.
to capital markets. You would have had to go public because back in the day, corporate companies were not doing $30 billion investments.
Right.
So prior to this week.
Wait, I asked him a question. So
you never cut in.
Well, no, I'm really curious what you think. The level to which this is extraordinary. I mean, am I overstating it? Am I understating it? What do you think is the situation?
Well, they are like probably the biggest private firm, no question. And you are right that they are linked up to all these other mega Mag 7s that everybody already cares about so much. And so it's it is, and they have this guy who, you know, everybody freaked out about with his Brad Gerstner comments last weekend. And I've never heard so many references to Jeff Skilling, Enron, and the comment that he made in like 2001 on an earnings call where he called one of the analysts an a-hole for not knowing, questioning his financial models or something. It was that same kind of vibe. And so there's so many people that reacted to that saying, oh, this is the sign that this is the top, and we're ringing the bell now. This is obviously an AI bull.
When the founder starts yelling at Wall Street.
Yeah.
Okay.
How dare you question me for how I could spend 1.4 trillion on outlays for the next 8 years?
So we're gonna get to that. All right, go ahead. Let's start from the beginning of the saga over the last week.
So prior to this week, OpenAI was operating mostly in the background. I know people that were following the story obviously were familiar with Sam. He's public on Twitter, but they were merely for the general public. They were the ones that was powering all of the announcements, the Oracle pop, but this was the week that they really took center stage. So here's what happened in summation. We're going to dive into each of these. So it started with the restructuring for them to pave the road to go public. That's what kicked this off. Then Elon and Sam Altman got into a fight on Twitter. Sam's co-founder, the deposition came out this week, and not pretty, a lot of ugly allegations in there. Then Sam, as we mentioned, was on a podcast with Brad Gerstner and Satya and got super defensive about very reasonable questions, attacking made-up shorts. And then the CFO yesterday stuck her foot in the mouth and said the government might need to backstop them. Everybody's like, wait, what?
She didn't actually say that.
And then them saying today, no IPO. And then, of course, the denial, Sam and her saying, no, we don't want a government backstop. We just want X, Y, and Z.
Let's take these one by one. The restructuring, Microsoft is already consolidating these losses from their OpenAI investment. Like that's a thing that's already happening. But clarifying what Microsoft's stake is an important step toward the IPO, because like they end up with what percentage, 27% or something? What's the number? And a 20% claim on their revenue. Yeah. Okay. That I think is what shoves this whole thing into broad daylight. Like, okay, they're on the IPO runway. Even if there's no timetable attached, they are now saying we're moving forward, and this is the first step, one of the first steps we have to take. I don't know, what was the Elon Sam fight?
By the way, just the $1 trillion mark, like IPO. Come on. Come on $20 billion of revenue. All right, so Sam, hold on, let's start here. So Brad Gerstner was defending what he was saying. People reading too much into Sam being feisty. I love that about him and our founders. We laughed about it after. If you listen to his words, here's what is said. And I think Buco Capital made the point, and I know you love that guy, said, Sam breaks people's brains, just like Elon. It's a thin line between grifter and visionary, and creating true believers to harvest their capital requires rhetoric that makes non-believers recoil. Elon hates Sam not just because he stole his company, but his whole playbook. And Josh and I were just talking about this. Like, it's a similar thing to what Karp is doing, galvanizing the shareholder base, pumping up the stock, getting mad at everybody else. It's not too dissimilar from what you're trying to do, but it's an effective strategy.
Yeah, I mean, I'm not the biggest Sam Altman fan. I love Alex Karp, and people take shots at Alex Karp because
Alex Karp of Palantir.
He was on CNBC earlier this week doing the same thing against Michael Burry.
That went well.
But he's always been like that.
Yeah.
He's always taken an antagonistic approach to the shorts. So it's not affected. It's not him. I don't know. I don't think it's anything more than the fact that he doesn't like these shorts. He believes in his company.
Right, I agree with you. I don't think that's as performative as some people think. I do think there's some element of it, like, let's create this us versus them thing for the retail shareholders so that we have this army of defenders. I think there's a tiny bit of that. But I genuinely think when you build a company over 20 years, you become completely intertwined with it to the point where somebody saying something negative about your company, it's like somebody insulting you or slapping you in the face.
But Karp seems authentic.
That's my point.
Yeah,
I think it's genuinely insulting to him when somebody is saying, I'm going to short your stock, because it's almost like I'm going to bet against you personally.
Right.
So I totally get that.
Sam gives off a different vibe.
Sam doesn't have a stock to bet against, though.
No, and like, I don't know, if I put my junior psychologist hat on, like, there is like some defensiveness in him. There is some like weird vibes you do pick up on. There is a lot of smoke around this company. Like, we haven't even touched on the fact that, what was it, like 2 or 3 years ago when like basically everybody quit that company because of Sam, and then there was this like board fight, and a bunch of board members left. There was a woman on the board then who just did a podcast where basically she sort of out and out said that Sam lied to the board back then, and kind of
that controversy was about the fact that, and this is Elon's problem with it, or stated problem with it, is that OpenAI was originally meant to be a foundation that was going to save the world from AI, while developing a type of AI that would be like helpful. And then all of a sudden it shifted to, well, we have a for-profit arm too, because we need to, because we're going to have to fund this technology, and that's totally reasonable. And then it shifted to, actually, most of this is going to be for-profit. And not only that, we're now in bed with Microsoft. And the true believers who were like, democratize AI for the people, were like, wait, what the just happened? Microsoft owns a stake in. So that power struggle then leads to Sam saying, it's either me running this thing or it's not going to work out. And the board sides with him because you need him, because he's the reason why anybody is investing to begin with. Okay, so that's explicable. What's inexplicable is being in the position that he's in, going on Gerstner's podcast and saying something to the effect of, there are times where I wish we were public, so that people could get short and I could burn their asses.
Yeah, it's like, wait, what?
That's crazy. That's crazy. That's super defensive. And even if you're taking it personally and that's why you're that way, that's a lot. And then he says to Gerstner, who is arguably among his top 5 most visible defenders and proponents of him.
And shareholder.
He says, if you don't want your stock, no problem. I guarantee I'll get somebody to buy it from you right now. So people hear that and they're like, whoa, what's going on with this dude personally? That he's all of a sudden. So I am of the belief that where there's smoke, there's fire.
That part was weird.
That was super weird. And that tells me that behind the scenes, there's a lot of that going on. And we just saw a little bit of a glimpse of it. What do you think?
I agree. I mean, I think it was a dickish comment. I think that, but like, are we out to give awards to these guys for being like the best human beings?
No, but here's where it matters. If you're an investor in any of the companies that have just seen a 20% rise in their share price because they, quote, are in a partnership with OpenAI, this matters to the public investors in many of the largest companies in the world, including NVIDIA and Microsoft and everyone else who's doing deals with OpenAI as fast as they can. So I think that's why this is such a fascinating situation. we don't have a share price to gauge is OpenAI rising or falling in the eyes of the public.
But if it was public, how much does it fall after that comment? 15% immediately? More?
Or in 2025 logic, it actually rallies.
Yeah, these days, yes, probably, yes. And I mean, the question, I mean, that says more about today's public markets than anything. I mean, I think the bigger issue here is that like AI and what's going on with AI is bigger than OpenAI, and so there are forces at work right now where Sam is an interesting player in all of this, but he's just like one kind of weird guy.
He's not just one. He's at the center.
But it's $13 billion in revenue. Palantir has a $500 billion market cap and is on a $5 billion annual run rate.
And
in
it's
revenue.
and it's 1.4 trillion in
commitments. It's a big deal.
And it's 1.4 in commitments. Like OpenAI is powering everything, and he's acting bizarre, and him fighting with Elon. So he tweeted, Sam did, and this is in the middle of all of this. This is the day before Halloween, a tale in 3 acts. So he shows a picture of him getting a Tesla.
John, we have this.
Your order is complete. And then he responded, hi, I'd like to cancel my reservation. Could you please refund me the $50K? Which is sort of a weird thing to do anyway. It seems like he's just f***ing with Elon just to do it. And then it says, address not found. So then Elon tweeted to him, you stole a nonprofit. And you forgot to mention Act 4, where this issue was fixed and you received a refund within 24 hours. But that is in your nature. And I feel like Sam,
this isn't gentle ribbing. These guys,
it's personal.
These guys hate each other.
Because
right?
also, doesn't it feel like from the shareholder base that Sam is basically copy pasting what Elon did with Tesla?
Yes, I mean, but then you could say that Elon copied and pasted with Grok, like what Sam did with OpenAI. So I don't know. This is like boys will be boys. This is like.
Yeah, but the stakes are like $1 trillion. That's the thing.
I grant you. Obviously, like I'm not trying to make light of the fact that like Mag 7 has all these commitments to OpenAI and vice versa. But I just think that that these guys, in the grand scheme of things, like these markets will roll on. Like the AI, everyone was freaking out over the CFO's comments yesterday or whatever about a government backstop.
Sarah Fryer, but those weren't her. She did not use the term backstop.
This is what she said,
right?
So read what she said.
Okay, I got it. It's bear with me. Well, I have the clarification. Oh, here it is. Okay, this is a Bloomberg article quote. ChatGPT creator OpenAI, the world's largest private company, is asking the U.S. government to provide loan guarantees for its massive infrastructure expansion that will eventually cost more than $1 trillion. She was at a business conference for the Wall Street Journal, and she said, this is where we're looking for an ecosystem of banks, private equity, maybe even government. Federal loan guarantees would, quote, really drop the cost of the financing. Yeah, no shit. Why even make a loan? How about a grant? Anyway, people flipped out on financial Twitter. And then she finished that routine by saying, IPO is not in the cards right now. Yeah, that won't be up to you. That'll be up to your privately held shareholders when they've had enough. Won't be up to. Did finance Twitter flip out too much over this?
Well, I think the idea that, oh my gosh, is OpenAI, are they
getting bailed out?
Are they going to get bailed out? With Sam's weird answer on the podcast, it symbolizes that these guys are like another Enron or something like that, and therefore, like we're going to be all as taxpayers on the hook for them. I mean, it's overdone. It's a great company with great engineers. To bring it back to Opendoor. Opendoor has been around for like 10 years, right? And so Opendoor had some amazing AI and machine learning people before people were talking about AI, even like in the 2017, 2018. They had rock stars, and they don't today because a lot of them quit. And they're and basically there are two places where all the rock stars quit and
Anthropic and OpenAI.
OpenAI and Meta.
Meta,
basically.
Right.
Those are the two companies that have been paying the most. Right. So the rockstar engineers have gone there. So they have amazing people at this company. And so a flighty CEO at the top.
Well, the real concern is now you have some of the biggest publicly traded companies in the country where analysts are baking in orders and revenue coming from these OpenAI commitments. And you have somebody like Brad Gerstner innocently ask something like, how could a company with $13 billion in annual revenue have $1.4 trillion worth of commitments? And then that answer, And then all of a sudden people are like, wait a minute, maybe these growth numbers that we're baking in for our public investments are not actually going to materialize.
Yeah, it calls everything into question.
That's the problem.
I think, if I was going to try to make the case for OpenAI, though, or in Sam's defense, okay, I would say there's never been a company out there that's shown the growth of our company.
I totally agree with that.
Like it's from the moment of like November 2022 when the ChatGPT 3 came out, like there's all these various charts that show like the adoption rate on ChatGPT has just been off the charts.
It makes TikTok look slow.
Right.
It just it blows by.
Forget the iPhone, forget all the thing, Instagram adoption. Remember how that thing grew?
Now, what they've done with that momentum is very wise.
Right.
They've made themselves too big to fail in AI, meaning there are so many partnerships now, including with NVIDIA, including with, you name it, Apple. Right. There are so many partnerships, so many overlapping deals or bilateral deals. There are whole groups of companies that are working together that nothing can happen to AI without it affecting the whole I don't want to say house of cards, the foundation of the house that we've built on this theme. And that's the part that's concerned. I mean, it's brilliant on their part.
Well, and so and you say, 1.4 trillion in commitments, like
I don't even know what that word means, by the way.
That's what so I think it's supposed to be 8 years or something out or so. But the question is like, if you're the CEO of this company, like, are you taking your foot off the gas?
No.
When Anthropic is like breathing down your neck and like Google's coming at you with Gemini.
But what does that mean? Take their foot off the gas?
Slowing down the deal making.
Should you not make those commitments?
Yeah.
Should like the question basically the what finance Twitter is saying is, just take it slow, just go easy.
I'll get profitable.
Just get profitable
first. If you believe
these companies never get profitable first, they always like go in breakneck speed.
If you believe what Satya. So, by the way, Sam Altman drops off the podcast shortly after that. He's like, I gotta go. And the way Brad was like, okay, no problem. Thanks for being here. It sounded like he knew in advance that he would drop off. But people turned that into a conspiracy. Like he couldn't take the heat. I don't believe that, but whatever.
Right.
That was the interpretation. But the thing about keeping your foot on the gas, if you don't, somebody else will. And there's a lot of money out there waiting to invest in anything that looks like it's winning.
Right.
So you're right. I agree with you.
And I would say that there has never been a platform. If you want to call AI a platform, there hasn't been a platform shift at this big. Before it's mobile. Like you want to compare the shift from desktop to mobile to AI. Like you're talking about like superhuman intelligence, right? Like what's the value of like owning that and like sort of being the first to kind of really dominate AGI or whatever? How valuable is that for the US to beat China?
Yeah.
How valuable is it for one of the American
if you look
firsts?
at the CapEx, you can only conclude that the smartest people in the room believe it's the most valuable trophy of all to capture. And some would even take it a step further and say, if they don't, they're done. It's
right.
You look at the way Alphabet and Meta are spending on this, it looks existential to them.
Yeah.
Like that's the only interpretation you could have is that they're betting the company on it because they have to.
Right. And also the interesting thing about that spending is nobody ever talks about the operating cash flow of these Mag 7s. And yes, the CapEx has been like up and to the right, but the cash flow has also been highly correlated with that and leads like the up and to the right, so there's always been a huge buffer of cash flow for these companies. So they're never spending out of their pockets. And the folks who are making these decisions at these companies, someone was telling me, like, you don't understand like how much like a thought and preparation goes into the business cases before they spend billions and billions of dollars in commitments in their budget. So they're not stupid, and they know that there's going to be payoffs from these capital commitments to build out these data centers.
Will they all have a payoff, or is someone going to lose? Is it a foregone conclusion that Meta's AI strategy is going to pay off?
Well, I think the biggest risk is going to be that the energy grid can't keep up with the demands. So the data centers will be there, but will the energy be there to kind of power that? And that's why there's been such a scramble just in the last year to build nuclear, get
Yeah.
3 Mile Island going again and all this kind of stuff.
Meta said that Reels is at a $50 billion run rate, and thanks to what they're able to do with the compute. But I think there's a bunch of different risks. That's one, that there's just a meltdown. We just can't power all of these things.
Or a political risk. Everyone's electricity rising, like socialism.
Yeah, that would do it.
In order to support the growth of these data centers in your neighborhood.
That would do it.
That's not popular.
Another risk is that we hear on one earnings call, the demand is not what we think it is, and these things gap down 1,000,000%. But we're not close there, because they all said on the last call that they're undersupplied. They all said the same thing. So that's probably in the future. But then the third risk, and which is coming to fruition this week, is, hey, wait a minute. OpenAI is at the center of all of this, and there is now doubt about the person leading the company. And also, there was this narrative in 2022 and certainly in 23 that Google's in trouble.
Right.
Like, they better, and Google stock got killed. And now Gemini is growing faster than OpenAI.
Let's put that chart up, John. Corporate AI. This is enterprise large language model market share.
Right.
So this is the percentage of the market that they're estimating these companies have. And the only two heading higher are Anthropic and Google. Meta, I guess that's Llama, is falling, at least relative to the others, not falling in absolute terms.
So this is it. If
so is
OpenAI,
OpenAI.
if they can't make good on the $1.4 trillion that they've committed to, and obviously all of this is showing up in analysts' earnings per share estimates, lower.
Right.
Let me share this with you. Deutsche Bank's AI hedge, navigating the data center debt surge. Deutsche Bank AG is taking cautious steps to mitigate risks from its burgeoning exposure to the data center sector. I guess they're raising debt for all these buildouts. Okay. Fueled by the explosive growth in artificial intelligence, cloud computing, blah, blah, blah. Executives at the German banking giant have been discussing strategies such as shorting a basket of AI-related stocks or employing derivatives to transfer risk. This is a Financial Times story who would be nothing less than gleeful to see this entire thing crash and burn. We should point that out. What do you think when you see headlines like that? If that's even 10% true, it's a little concerning.
Well, like, my first question is, like, what are all these AI stocks? Because when I turn on the TV and I see AI is in a bubble, like, okay, NVIDIA,
Broadcom,
we know Palantir, Broadcom, Micron,
Dell,
okay,
Hewlett Packard.
Out of all of those, I would, like, none of those is in a bubble with respect to its, like, multiple that it's trading at now relative to where it's traded at historically, except for Palantir.
Provided the earnings next year show up.
Yeah.
Then we got no problems. I agree.
But, like, when I last looked at NVIDIA, for example, it was trading, like, below the 50th percentile of its, like, sort of,
it's
like
32 times earnings, and 3 years ago it was like 90.
Right.
Yeah.
So I think people have been skeptical that NVIDIA is going to be able to keep up these, like, multi-billion-dollar quarters. And so therefore they're ratcheting down their kind of future expectations, which is why their multiple has been, relatively conservative compared to where it's traded at in the past when it was a faster grower. So it's really only Palantir. I love Palantir. I love Alex Karp.
Yeah, what are you crazy?
I missed it. I
Would
missed
cause
it.
a problem with this guy?
I tip my cap to Dan Ives for
We're
being,
gonna have Navy SEALs coming through the window.
But last I looked, trades at 86 times next year's revenues.
You will take it and you will like it. In this room, we believe in America.
So I think Michael Burry has, for some reason, he gets lauded as this, like, brilliant guy because he was on The Big Short. And everybody reports his puts on his latest 13F. But nobody ever goes back, like, 6 months later and says, oh, yeah, remember all these puts he bought? Like, they expired, like, worthless and all this,
He does admit, he does say things like, I was wrong, like that go to cash call or whatever, sell. Right. One word tweet, sell. He owned it.
Right.
One of the Thread boys was pointing out that, like, for the last 4 years or whatever it is, his 13Fs have been coming out perfectly within a 24-hour window of the same date, quarter after quarter after quarter after quarter. This one happened like 10 days early and coincided with the earnings call for Palantir. Almost like, by the way, before this thing reports, you should know that I own puts.
Right.
You think he's sending a message in the timing of his 13Fs, or have we all just been like eating too many of these mushroom chocolates, and we all need to calm down.
I think we're all getting
All right.
a little too
It's too much,
hyper
right?
hyper focused
All right. I
on
agree
all
with
of
that.
these, like, what color was, his pee when he got up in the morning or something.
I agree with that. There are people comparing the behavior of Sam Altman in recent days and weeks to Sam Bankman-Fried in 2020 or 2021. That seems a little extreme too, I would say. But like, this is the mood out there. There's a lot of people that want to see this thing either because they missed out.
I think it's super bullish, to be honest.
Yeah.
When I hear all that,
Okay.
angst and concern.
Well, they acted
and
that
the
way with
gnashing of the
Elon
teeth.
too.
Yeah.
So
Remember the world was going to end because
Elon had to
called
raise
the
money.
guy, pedo guy, and then the world was going to end because he sort of made these comments about Bob Iger, go F yourself and all this kind of stuff. So, and yet we all went back and we bought Tesla again. It's like, so I just think the market rolls on.
That's a really good point, and it ties into what you're doing now. The investor class is not precious about the norms and traditions that we grew up with in the 80s, 90s, 2000s, 2010s. Like, the investor class now, they love seeing the leadership of these companies acting as unconventionally as possible, telling people to go f themselves if they don't agree. Like, it's almost like a version of pro wrestling. And we're not precious about, well, in my day, a CEO would never act like that. Well, it's not your day.
Right.
It's a new day. The audience for these antics is 27 years old. They're on Robinhood. They're plowing money into their account every week. They're buying options. They love this shit.
Right.
It's a spectator sport. So you can fight that tide, or you can stay completely out of it, or you can lean into it.
Right.
Eric Jackson has chosen to lean into it. Tell us about your midlife crisis. How did it start? And what are you having as much fun as it looks like you're having? The stocks are working, so that's good. But like, what's going on with Eric Jackson?
I think the midlife crisis actually started here in this room.
We did it
3 years ago,
All right, fine.
or whatever.
When
you guys asked me to, in the middle, it was June 2022, and you guys asked me to say, like, you were talking about, oh, will tech ever come back because things are so bad? We thought
That's so us.
What was the title of the show? Is this as bad as it gets?
Yeah, something like that.
So you pitched Opendoor.
Duncan, look it up. I want to know.
Opendoor and Carvana.
So I think you said, give us name names.
Yeah.
Name names, Eric.
Like,
give
what
us
would
the
you-
name of a stock that's
what
going
would
to
you
come
buy?
back from the dead.
Yeah.
One of these like left for dead companies.
Okay.
And so I said, well, I got two. And I mentioned Carvana and Opendoor. And I gave the reasons why. Very similar businesses, and one's going after cars and one's going after homes and all this kind of stuff. And I don't know if you can pull up that chart that shows, like, for the next 6 months after that podcast.
John, let's roll it.
I did not see that until like this morning.
Your Carvana call on this show was one of the best, like, Babe Ruth point at the stands. That was one of the best calls I've ever seen.
No, it wasn't.
Not for the first 6 months.
No, it wasn't.
What do you mean, no, it wasn't? How much did the stock go up from that
Excuse me.
day? I know you know.
Can I present the case?
Yeah.
All right. Charts on.
By the way, why is it 700 degrees in here? You guys doing that on purpose? I'm shedding a layer.
So
Get the cold to lower the thermostat.
So yes, it was a legendary call. Carvana is up 1,200% since. John, let's roll through some charts, please. Do you not have this?
What chart do you need?
The Carvana ones, 12. So you pitched this on June 17th, 2022.
Looks great if, like, on the big picture.
So these stocks were in massive.
The red line is Eric?
Yeah.
The red line's the podcast.
Massive drawdown. So nobody wanted anything to do with these names. Next chart, please. And then ever since, we know what happened. Carvana's up 1,200%. Opendoor had a rocky road. But let's zoom in a little bit. So Josh said Eric called the shot as one of the greatest calls of all time. And actually not even close.
No, greatest calls I've ever seen, personally.
Really? Because after Eric said that, these stocks fell 90 and 80%.
You have to have patience as an investor, Michael. I tell you this all the time.
I've tried.
Is that what
So wait,
happens?
hold on.
I've tried that line with my own hedge fund investors,
Yeah, it
Josh.
does.
So-
and nobody cares when you're 90%
real?
drawdown.
So Eric called Carvana, which was a 100-bagger. But right after he came on, it fell another 90%. Opendoor fell another 80. So you absolutely nailed it, sort of.
No.
So the episode was called "It Can't Really Get Worse."
Oh, it got 90% worse.
It got worse. Wait a minute. So this is important though. You didn't buy all your stock in Carvana and then come on the show. You probably bought that dip. This is what it means to be an investor.
Yeah.
Dip.
If you like a stock, what was it, $2 at the time?
No, when we were on, I think it was $20 or
And-
something.
and then what
Carvana.
And it went down to 2.
And it went to 2?
It went down to $3.50 was the low.
yeah.
What ended up being your
$3.50.
average cost if you're able
So
to
it
reveal?
had been at 400.
Right.
It came all the way down to $3.50 in December 22, and then it's come all the way back to 400.
It's
since.
unbelievable.
Oh,
So-
shit.
So,
Was it the best performing stock of last year?
for several years,
Several years.
But what's like so incredible. So what happened is I knew this stock. I knew Carvana. We'll talk about Carvana first, and then we'll go to Opendoor. I traded Carvana well because like in the years prior to COVID, I'd been like a small mid cap, like growth tech investor. And so, Carvana IPO'd in, I think 2016 or something like that. So it was a go-go stock. Like and Wall Street didn't care. It was like balls to the wall, keep building these bubblegum machines by the interstates. Don't run it for profitability, just run it for growth. And they were obliging, and the stock did. That's how they went from like $15 to
In the
$400.
0% interest rate
Yeah.
era, that was the logic.
Right.
Yeah.
But what was interesting to me in 2022, when the stock was collapsing, is that the CEO, Ernie Garcia Jr., he bought $70 million of his own stock that year, 70. And so like one in a tranche in like March of that year when it was like I think it was like $50 at the time.
Oh my God.
And then another tranche around June when we had that podcast around like $20 million.
He
worth.
followed you into his own stock?
But then later on in the year, around Thanksgiving that year, there were two guys. One was the chief product officer, another junior management team guy. One bought $3.5 million worth of stock at $7.50, and the other guy bought about, I don't know, $700K worth of stock. But you never you see CEOs token buying their own stock at the lows, like Michael Dell, like he bought Dell,
and they're billionaires, right?
Yeah.
It almost doesn't matter.
You never see like a chief product officer
Rank and
buying
file.
$3.5 million worth of stock.
Yeah, where do you get that money from?
Because like probably 98% of his wealth is tied up in the stock already through RSUs and all this kind of stuff. And so he's, so it turns out that guy was a Canadian guy. He followed me on Twitter. Dan Gill's his name. And so like I reached out to him in January of 23, and I was like, hey, can we chat and stuff? So I called him up and I said, hey, Dan, I got to be honest with you. Like I look at a lot of like insider filings. You never see like people like you, with respect, spending $3.5 million on their own stock, especially like a battleground stock like Carvana. Like, and he was like, "Oh shucks, like I'm just, we've got a tough road ahead of us. It's not guaranteed, but we really believe in each other. We all went to Stanford together, so we know each other on the management team and all this kind of stuff." And I said, like, I said, to be honest, I don't know if I had that conversation with my wife. Like, I'm the chief product officer for Carvana, and like, hey, honey, let's take $3.5 million out of the IRA. We're going to roll it into more Carvana, okay? Because I really believe in Ernie and the team, and we've got this. To be honest, I don't know if my wife would have been okay signing off on that.
That's a high. No way. That's a high. She's like, wait, you work there? No, that's a high level of conviction. Why was that stock at $2? What did people think it was a fraud?
I'd go on these TV shows where I'd debate like the Wall Street analysts covering it, and I was like, hey, Johnny from Wedbush or whatever, like, how'd you come up? I'd say this off air. I wouldn't say this on air. It's like, how'd you come up with your $20 target? Are you basically saying like, you think as a running company, this should be worth 40, but there's a risk that it might go bankrupt and therefore go to zero. So you just pick 20. Yeah, it's like, yeah, basically that's how we did it.
Oh my God.
So,
but what did the bears think? What did the person that sold it at $3 must have thought it's going to zero?
right. It's going to file for bankruptcy. They
That was
they
the
can't
issue.
keep up with their debt.
The debt.
They had too much debt from building all the
And
bubblegum.
rates were rising. Therefore,
Rates were rising.
debt
Who's going to
would
buy a
become-
car from this service? This service is dead. And yet you talk to people that used Carvana and they loved it, even at $3.50, where they didn't care about the stock price. They actually loved the service. So so I didn't get in right away. I was still like working away. I had a billionaire who was an investor in my fund who pulled out at the end of 22 after like I had 2 years of bad performance.
Sam Altman.
And I was like, and he was like 99% of my AUM. And so I was like, oh my God, and I had all these like lawyers and Cayman's directors and people I was paying money, like a lot of money to, saying, Eric, you just got to shut shut the firm. It's like not worth it. Like
You got to stop doing this.
He was all your funds, and now you've had like these bad 21 and 22 years. The way that you do it in the hedge fund world, just shut down. And then like
Start
6
over.
months later,
Yeah, new
start
track
again,
record.
and you don't have to show it anymore. And so, and nobody, because
Well, you don't have to worry about a high watermark because it's a brand new fund.
right.
You're never going to hit a high watermark back when you're down enough.
Yeah, but I didn't even care about that. And I just said, you know what? The whole thing's paid for. And I don't know. It didn't feel right wanting to shut this. Although I didn't feel great thinking like, what the heck am I going to do with the rest of my life? And how did I get here? Am I going to be able to keep paying for my kids' schools and all this kind of stuff?
This stock resurrected you. Is that too much or is that about right?
Yeah, I got to work on building like the little AI team within the company, and the first iteration of the first model that they built, these guys come to me and they
Find
say,
me the next Carvana using AI
right now.
They said in May 23, they said, oh, okay, I ran the numbers, boss, and okay, like show me the list of like what the model says, should be my, top 10 positions in my, portfolio. And number 2 on the list in terms of size was Carvana at $11 a share at that time. And I was like, "Are you sure about this? Like, can you check your numbers again? Can you take this back and like just humor me? Because like I don't want to like just sort of jump, both feet in and like find out later like 2 weeks you were like, oops, we didn't update the simulator and this and that and all this. And so it took him a week. He comes back. And he's like, no, it's good. Yeah, I think you should really buy it. And by that time, it was like $15. And that's one of the most interesting things about these 100 baggers is that they get priced basically as if they're going out of business. But when they start moving up, it's violent.
Especially with a lot of shorts.
So this went from like $3.50 in December of 22 to by June, it was like $25. It was over $25. So and it was just a combination of like, oh, the earnings weren't so bad. Like they weren't great, but they weren't terrible.
Why don't you sell at that point? Like, where's the conviction coming from?
Well, so I got in, so I trusted the model and got in at 15. And so then I, stayed with it. And I, the models kept saying, no, stick with it. But between 15 and $150 with Carvana, there were 3 separate times where it had major drawdowns. There was one 66% drawdown that it had in the middle.
Holy
and so
shit.
like this was like a major
And
position.
you rode through that with a full position?
I kept
crazy.
it. So it went from, and then it drew down in 10 days. It went from like $88 to like $42. Like no news. There was no news. I don't know. There's just like macro stuff, or maybe Sam Altman said something and pissed the markets off or something. And so, but then I just decided like I'm going to stick with it. But at 150, I started having this voice in the back of my head, like the billionaire who used to have money with me. He had like some Swedish guy who was like his chief investment officer who worked at his family office, right? And so he would always be on my case, like, Eric, why don't you take a profit when a stock 2Xs or 3Xs? What? That's not good enough for you? You need a 5X to sell, like a 10X, like
100X, motherfucker.
So, and that's the mentality, like that we're all sort of taught growing up. It's like it's all about batting average. It's like just to eke out a gain over the market,
Singles and doubles.
Like you don't just sort of like, hey, I'm gonna like roll the dice and just sort of let it all hang out and stuff like some of these people like that you hear about in trading crypto or something. And so but at 150, it was too much. I was like, I'm sitting on a 10 bagger. I know this guy would be like all over my ass saying like, I got to sell this thing. So but even then at 150, I shit you not, I believed that this thing was going to go to $400. But I said to myself, this thing is volatile. And so I'm so smart. I was the guy who like got into Carvana early. So I'll just like trade it. Like I'll just sell it at 180, buy it back at 130.
The fantasy that everyone thinks they're going to do.
And honestly, like if you added up all the trades from like 150 to 400, I'm sure I lost money on all those trades.
Yeah, that doesn't work.
And so,
but it ultimately did go to 400, which is what you
it's
thought.
pulled back. It's now 300, but still a great company. I don't own a position in it now. So, but then earlier this year, like the midlife crisis is like, I'm paying for all these AI guys. And they were like building all kinds of models, option models, crypto models, earnings models and all this. And I was like, guys, like, I'm not like a billionaire myself here. Like I can't keep funding this thing out of my pocket.
You're not looking for experiments. So, you're like, applied AI guys.
Let's just pick, 2 models that seem like they're going to work. Okay. And like, it looks like the Carvana model had something there. So let's just try to find 100 baggers. Let's do that in the hedge fund. And then the other thing that worked was the crypto models. So that's what we're going to do with this sort of Gen 2 crypto DAT thing, which we can talk about later, EMJX.
We'll skip the crypto for this week because I want to get to some of your new ideas.
So Opendoor was
let's start with Opendoor. So this is an idea that is currently in motion. Like it's not early, or you think it's early, but it's already gone up a lot. You're already right. So you sent it. What was the tweet that he sent at 88 cents?
I don't know. You tell us. What was it?
Well, I
get
wrote,
in, motherfuckers.
I just wrote out it was some 8 or 9 thread.
You said this. You said $82.
Yeah, that was the Babe Ruth call my shot moment. I was like, this thing is going to go to $82 a share in 3 years.
Let's just start with the reaction. You have people that know you at that point, but you have a lot more people that know you now, right? But then you have people like me who know you from your past life as a very buttoned up activist investor. No, but you're a guy, like you're a legit guy. So I've never seen you do anything like that. Be like, this 80-cent stock's going to $82. I think people thought maybe that you were hacked.
Mm-hmm.
Like people that know you for a long time know you're like just an all-around good guy, calm. That's the midlife crisis-y part to me. I'm like, oh, this guy's lost his mind.
Oh yeah, no, I got DMs from
all right. So I'm not the only one that had
Adam
that.
Feuerstein who used to write at the street.com.
The scam buster of biotech stocks.
He's like, honestly, Eric, are you
okay?
Are you okay?
Yeah.
Honestly, like I don't want to pry. I don't want to pry, but like seriously, I want to check in on you.
Did Herb Greenberg come at you?
No.
Okay.
No, I didn't hear from Herb, but I heard from lots of people, obviously. Lots of hate. People thought it was crazy and thought it was ridiculous. And I had no shame.
No, I thought the stock was going to work, but I honestly do think it is crazy because iBuying, you know a lot more about it than I do at this point, but I feel like it was an experiment that failed. Now, granted, it was in the absolute worst possible environment. iBuying in a housing bubble, probably not a great business. We found out. But I think
Zillow threw in the towel.
But I think we also learned
on iBuying.
But didn't we also learn that you kind of need people involved? Because I remember vividly one story that came out was some dude who's like, this house next to me, there's a gigantic barking dog in the backyard neighbor, and this house was on the market for 3 years because everybody knows that the neighbor's dog is impossible, will never stop barking. And Opendoor came in and bought it and sold it a year later for $100,000, whatever the case was. And it was like, yeah, you kind of need people to do this. Mm-hmm. So why do you think that this is a business model that makes sense in the real world?
Well, why I did all of those things is like a combination of just like my own mistakes from the past. And so like learning from the mistake of not owning enough Carvana and not getting into Carvana early enough, not calling my shot with Carvana. Well, I mean, I guess I did, but I wasn't very precise on this podcast. I didn't say Carvana was going to go back to $400. And I mean, the two models of Carvana and Opendoor were very similar. So Carvana doesn't make most of its money from buying and selling cars. It's like I buying for cars. They don't make money from that. They make money from finance and interest. 80% plus of their EBITDA margin that they have today.
And there are a lot of great stocks that are just like that type of thing.
So I always believed, and it was part of the original tweet thesis for Opendoor, is like they got to do mortgage and title. For sure. Like that's where they're going to make their money. There's a reason why there's two guys who own NBA teams who run mortgage companies.
That's United Wholesale Mortgage, which is Matt Ishbia.
Yeah.
And then Dan Gilbert, Rocket, which I'm long.
Right.
You probably think that Opendoor is going to compete with Rocket. Is that part of your thesis?
I think Rocket's a great company.
We will rock you.
I think I have another company better that's more of a direct competitor to Rocket.
We'll crush that shit too.
But Rocket, the reason to be bullish on mortgage companies and the housing market and American housing is
the worst environment ever right now. How could it get worse?
We're at the beginning of the rate cut cycle. It's a huge market. Rocket, as big as you think of it as this gorilla, it's only got a 6% market share. In the whole country.
Compete with every bank in the country for starters.
So there's an opportunity for everybody at the table to kind of get in there, and these guys, Dan.
So, but tell me more about what you just said. Opendoor scores the same on your model as Carvana did. I'm not saying give us the whole AI formula, but like, what are the important things if you're out there looking for 100 baggers? What are the things that you're looking for?
Well, there's a bunch of technical things you can look for. So there are signs of capitulation in the stock and just the seller exhaustion and things like that.
Check.
And there's signs like getting above a certain moving average that makes sense for that particular stock, which you should.
Because it tells you the narrative has changed amongst investors.
Right.
Yeah.
From a fundamental perspective, there's a major re-rating that happens when companies go from money losers to money makers. And so people thought that Carvana was going to go bankrupt, right? Because they couldn't make money and they couldn't keep up with their debt. And then suddenly they were able to shift and show that, we can make like a decent EBITDA margins here.
That forces bears to reevaluate whether or not they want to stay on the short side.
Right.
And then that alone could trigger upside momentum, which attracts new investors.
Yeah. And now short covering is another factor that you would look at.
Well, yeah.
Like everybody loves to, go through all the most shorted stocks. And just because a stock is heavily shorted doesn't necessarily
many with good reasons.
Yeah,
so Opendoor reports in 5 minutes, and then, by God, I really hope this doesn't get awkward. I swear to God, if this gaps down 30%, I'm just gonna leave and feel very bad. But how are they doing fundamentally? Like, I know it's very, very early. The CEO just left. We're gonna hear from the new one. Is this a viable company?
For sure, it's viable. Yeah, like
no.
The guy who was the COO at Shopify, who like a $200 billion, I think we would
Canadian
all agree,
tech giant.
legit company.
Yeah,
right. So basically he had to do nothing for the next year or two, and probably Toby Luckey, who's the founder CEO, is going to bump up to chairman, and somebody is going to get elevated to CEO of that company and make a lot more money. He willingly left, even though he had this stellar reputation, to become the CEO of Opendoor, a $3 billion
How much
company.
stock did they have to give him?
They gave him an Elon type.
But that's
package.
good, though. If you're a shareholder, you want them to do that.
82 million shares fully unlocked to him, which wasn't a coincidence, because 82 was my price target for it.
Okay, you're in communication with the board of directors now. They're taking you seriously. They've been for a while.
Yeah.
Okay. How long did it take for you to break through and be like, guys, I'm building the open army. You need to have me in your corner.
Well, Adam Bain, who used to run sales at Twitter, do you remember?
We know Adam.
He's on the board. And so I think the same day that I sent that tweet out on July 14th with my like $82 price target, Adam sent me a DM saying, come on, really?
Yeah.
Like he couldn't believe it. Like
I love Adam, by the way.
And
super nice guy.
So and then it was like a couple of weeks later, and he sees the stock moving up so much. It was 10 days after that first tweet where the stock got halted because it traded 3 times its float on one day. And they just halted it for like 13 minutes. It had gone from like 51 cents at the end of June to I think it was like got halted, almost touching $5 in late July.
But this type of shareholder grassroots mania starting on social media, like it's effective. And I feel like companies that have nothing left to lose because their share price is trading under $5, they're now actively they're cultivating this. So if a shareholder comes along and wants to get really vocal and whip up a frenzy about a stock, again, back to we're not precious anymore. Historically, the board of directors would be like, shh, don't encourage it.
Right.
Now we just saw Hertz save its own life. We saw AMC save its own life by cultivating this type of investor frenzy. So it's a two-way street. It's not just a thing that's happening to companies. It's a thing that companies are actively participating in.
I could tell the old CEO, she wasn't used to it. She was from that old school.
Right.
She was like, I'm just going to ignore this guy. And then she couldn't do that for so long. And the board initially was like, no way, we're engaging with this. And then they've obviously totally come around. And now everybody since, at these other companies that I've taken positions in, like Better or some of these others, like they've been all very—
Eric's buying. Yeah.
They're like, hey,
we're
like we love you. And like, we want to support the retail, and we're going to do video calls. And Opendoor's doing a video call today, just like Palantir.
Eric Jackson organized a breakdancing competition to save the rec center. Everyone's very excited so now you're in the mix. No, I think it's cool.
Well, now the question is, and you guys talked about this on a previous show, is it a meme stock or is it a
No, that's
stock?
not the question. Is
cult stock.
The question is twofold. Do you get nervous that somebody will look at this and say, this doesn't look kosher to me. This guy's long the stock and being extremely vocal about it on social media. I'm not saying what you're doing. By the way, I draw no distinction between that and somebody getting on stage at Iris Own conference just because they're wearing a suit,
Right.
And saying this $20 stock should be 100. Why is that okay, but doing it on Twitter is not? So I like it, and if it makes people money, great. But the dark side of this is if something goes wrong, you kind of become forever associated with, for better or for worse.
Yeah. No,
Right.
I had a meeting this morning with some guy in Hudson Yards who he's anonymous on Twitter. So we met him in person. He's sort of famous because he tweets out these photos of his open portfolio. He's in one of his portfolios, he's full port open, and it's he showed it to me this morning. I think it's like
How much money did you make him?
Well, it's a $17 million portfolio. He was in it before I tweeted about it.
Okay.
But he's very happy. But he was saying to me, he said, "Man, I just don't know if I could have done what you did, where you just stick your name out there. What if you were wrong? What if
So
you
what?
just
What
looked
if? Do you think about that?
I mean,
You just go back to Canada and pretend it never happened?
I've gone through so much crap in the last few years. You look at that chart, I've had big drawdowns in my hedge fund. I had this billionaire turn his back on me and walk away. I've gone through this sort of internal crisis and stuff. So when people say oh, how do you have the gall to self-respect to stand in front of Drake's house making a video talking about Opendoor? I just don't care. I believe in Opendoor. I believe in kind of the types of philosophies that I'm advocating. I've been amazed with all the, it's predominantly been middle-class people who are in the open army. And they're from I would say it's 70% are outside the US, all over the world.
The open army are people who have bought the stock and are willing to celebrate the company on social media with each other. That's it. It's nothing more.
Yeah.
It's nothing more nefarious.
It's a new
than
version
that.
of GameStop. It's a retail group, but they are much smarter than what you typically kind of get vibes from Wall Street towards retail.
It seems slightly more cerebral than GameStop. It's taking place more on X than it is on Reddit. Is my understanding?
Yeah. Oh, yeah.
Okay.
So there's a lot of weirdos on Reddit now. And
I love
Discord.
Reddit.
No weirdos on Twitter.
No weirdos on Twitter.
Imagine this thing peaks at $81.
Reddit's got weirdos. Twitter has people who will physically harm you in real life if you disagree with them on something political. Do you sell them merch? How organized is the open army?
No,
do you have a newsletter that they're subscribing to, or how do you communicate to them other than through tweets?
I haven't
telepathically.
I am. I actually just had a Zoom with Phil Perlman, who's going to help me start a newsletter.
Okay.
Because I haven't had a newsletter. I haven't been monetizing this. I have a hedge fund.
Can I do my Phil impression?
Yeah.
Genius, bro. You do the letter. Yeah. Of course you do the letter.
He's like, Eric, I fucking love it. You're authentic. You've tapped into something with this rising dynasty, and you're just gonna ride it, okay? Because it's you. It's you.
Shout out to Dr. Phil.
So what about these people that you say they're mostly middle class? Are you listen, I'm as enthusiastic as they possibly could be, and also be responsible?
Yeah, for sure. So I started doing this Drake series, right? These daily videos in front of Drake's house.
What, for the people that are totally mystified by we keep saying Drake, what are you doing?
So my 16-year-old in the summer, he's like, Dad, you're always talking about how you think Open's is great stock. His name's Julian. He's 16. He's grade 12. His dream is to get a D1 scholarship.
We have a son the same age.
Yeah.
Okay.
And he said, but most people don't watch CNBC, they don't watch Bloomberg and stuff. So how are you going to reach those people? And I was I have no idea. He's like, well, why don't you do a video in front of Drake's house? And I
go viral, Dad.
I thought he meant a one time, go take a selfie or do a little video. Hey, I'm Eric Jackson in front of Drake's house. Yeah, I was like, yeah, great idea, Julian. You want to come over, be my cameraman and stuff? And he's like, no, you got to do it every day until he buys open stock. And I was like, what? And he's like, yeah, no,
it has to become a thing.
Has to be viral. That's the only way it can be viral.
That's right.
I was like, what? Even weekends? Oh yeah, even weekends too. How long? Well, it's open ended. That's why people will tune in, because they'll be intrigued. They'll be like the Truman Show,
and they're going to want to see it. And they're going to want to see it happen.
Right. So I said, okay, I'm up for it. So we go over there. We start filming these videos, usually only 3-4 minutes in front of his house. He said, hey, I got a whiteboard, Dad. We
have pictures, John.
Hold it up, and day 1, day 2. So yeah. So
Drake's house, day 1.
Pretty nice house.
We're gonna keep coming back until Drake buys one share.
Look like such a
Opendoor
fucking nerd in this.
Hey Drake, it's Sunday.
Raptors
Rest
hat.
for
It goes on.
some, not for you. You're about to play a show in Copenhagen. No rest for us over here. Been up since 3, doing some analysis on Opendoor. All right, day 19, Drake, back here. First of all, I want to say,
I've never seen this
some
compilation.
Opendoor merch.
Day 35, back here at Drake's. Had a big
See, I got a
rainstorm
microphone
this
here.
morning.
People complained. I can't hear you.
Day 80.
Day 80.
Oh my God, this is kind
Hold
of
on,
nuts.
hold on. We love you. This is.
I love that he has a payphone in front of his house. Isn't that cool?
He got the British, like the red payphone.
No,
is that what that is?
no, it's a Canadian
Oh,
Bell
Bell
payphone.
right.
I don't know. Anyway, so I mean, this thing is, I don't know, it's got like 10 million impressions across all these different videos, and so I feel a certain pressure to get to your point, Michael. Like, you know, like you get all kinds of weirdos sending you messages saying like, I put all my money into Opendoor and stuff like that. I don't know if that's what I would advise. You should talk to your financial advisor and all that, but. Some people are really like into it and excited about it, and you do feel a sense of responsibility. Obviously,
Yeah, I would hope so.
And
That would be weird if you didn't.
And so, and the other thing that you feel is like, how do you keep it fresh? How do you, like, if you're talking there every day, like what, like, oh, he didn't buy any shares today, so check back tomorrow.
Now,
and all
you
this
have
kind of stuff.
his bodyguard bought stock.
Yeah. So on day 10, we went over at like 8:30 at night. It was dark. And like in the middle of the payphone, by the way, turns purple at nights, which is really cool. If Opendoor goes to 82, I'm definitely getting a payphone that turns purple in front of my house for sure. So this guy comes out of the bushes, and at first I thought he was gonna, hey, stop recording, get out of here, guys. He let me finish, and then like he comes over and he's like, guys, what's going on here? We've been watching you for the last 10 days on the security cameras. What, you're talking about stocks or something?
Yeah.
And I was like, well, no, it's actually one stock in particular. And I whipped out Yahoo Finance, and I was like, it's called Opendoor. And I was a hedge fund manager who was early into Carvana, and it 100x'd. And we think like Opendoor can 100x. And his name's Bucky. He's like, 100x? Like, so what if I put $10,000 in this stock? Like, it could 100x. I said, yeah, Bucky, if you did that, and I was right, and it goes to 100x, you'd be worth $1 million. Your investment would be $1 million. He's like, what? I'm buying this thing on Monday morning. What does this thing trade and all this kind of stuff? So anyway, he's a great guy. He owns
stock goes to
he owns
zero.
Open.
You're never going in front of that house again.
He owns Better. He owns Open.
Okay.
And so he said to me, like, he's like, the guy you got to talk to here is Future. I was like, Future?
Drake's
like, what's
manager.
that? He's like, yeah, Future's Drake's business manager.
Yeah.
He does all his OVO stuff, and anything business is him. So I'm going to hook you up. But Drake's in Europe right now. He's on tour for the next 2 months or something. So I still haven't met Future. I was texting with Bucky a couple of weeks ago, and he's like, oh man, they just went to the Bahamas. I think they all travel like as an entourage or something.
Yeah.
And so he's like, but don't worry, trust me, I'm going to get them.
I got the cheat code for you. You have to get in touch with Bobby Altoff. She gets these like one-on-one interviews with him. Yeah. They just did another one. It was equally,
they were in bed together.
It was as pointless as the one before, but maybe more pointless. But the point is, get her to buy the stock because he follows her.
Right.
So you got to think about it orthogonally. Right. Am I saying that right word?
I refuse to learn what that word means. I hate that word.
Orthogonal to Drake are the people that have some way of being in Drake's eye. And so I would think about, like, where do you see him dropping likes, or where do you see him actually? He doesn't do a lot of media, which I think the last mystique left about him at this point.
Right.
But he does her show for God knows what reason. I want to ask you about some of your new investing ideas, and we don't have a million hours to spend on these, and I want people to follow you so they can learn more about them. So we'll do like a mini lightning round. But before we do, are these all potential 100-baggers or not necessarily?
Yeah, I mean, I don't.
You won't buy something now.
Nothing goes into my portfolio that I don't feel has the possibility to 100x.
Is that gangster?
Now, it could be 4 years, could be 5 years.
You're shaking your head.
I mean, that's one word to describe it.
Why aren't you an active ETF at this point?
I don't know. People have asked me that.
Well, I guess.
Matt
you saw
Tuttle,
Dan Ives hit $1 billion the other day.
Yeah.
Where's Tom Lee? $2 billion?
Yeah, he must be with
Granny.
Granny.
You telling me you couldn't have $500 million under management with a strategy like this? If everyone just says I'm putting $1,000 in, let's see if Eric can turn it into $100,000.
Right.
I'm just saying.
Yeah. No,
right.
there's a big retail following. So.
All right, here's your stocks. We did Opendoor to death. Better, BETR.
Right.
What is this?
Well, actually, I think this is going to be the poster child for why AI is not a bubble. So they're a mortgage originator. And if you've ever heard of them, you probably heard that the CEO was the guy who fired 1,000 people on the Zoom
I
call.
remember that.
Oh,
December
That
2021.
That social clip.
And so it became like a DEI thing, like, oh, you're
Radioactive. The stock.
ruthless
Yeah.
Wall Street CEO didn't care and fired all these. Well, the truth was, Better, mortgage originator went from a $55 billion a year run rate at the beginning of 2021 for mortgages that they were originating to $5 billion by December of 2021 after the rate hikes.
Right,
so if your business drops like 90%, like you are going to need to like cut costs. He had 1,000 people in India that were basically pushing paper around in order to send out commitment letters so people could, get mortgage offers from different places.
He made the company untouchable, which is why it sells off.
So, and then it took a while for them to SPAC because like they got slow rolled at the SEC because they thought it was a DEI kind of issue and stuff.
Oh, it wasn't public yet.
Yeah, it wasn't public yet. Anyway, the stock immediately sold off. SoftBank owns like 17% of it because they thought it was going to be like the next big thing in mortgages. They had started 10 years ago building an AI team to kind of automate the whole process. But in 2021, it was still too early. They still had to rely on humans. And the funny thing is, when I started doing the research, that year in 21, they could have done over $240 billion worth of originations, but they just physically didn't have the people to push the paper around to do that. So anyway, they fired all those people. They decided to kind of refocus on AI. The guy who actually built their original matching algorithm at Better was the guy who built the Spotify music matching algorithm. And still he's responsible for 82% of the code that still runs at Spotify. But he came to Better to kind of build this mortgage matching algorithm. Now they're ready for prime time. And they don't need all those people that they used to employ before.
All right, so it's a working business. It's not a pipe dream. It exists.
It exists. It's like a player.
How much revenue they do?
And what we're going to see, like their earnings are next week. We'll see, just like we saw with Rocket a couple of weeks ago or whenever they had earnings, does a little blip down in mortgage rates translate immediately into increased volumes.
Yeah.
And so thinking ahead, like what might this business look like in a year or 2 years?
How much revenue do they do now?
Right now, they're something like, I'm trying to think of their market share.
If you don't know offhand,
2.6%, I think national market share is, but I don't know what their revenue is. But they're one of they've just got forgotten about as a SPAC.
Okay.
And so they basically now have to prove that they don't need these people to kind of
that they have a
run their
mousetrap
business.
and it's automated and it works.
Yeah.
Okay.
Exactly.
Every time I turn on CNBC and I see the ticker going by the bottom, I see this IREN stock. I still haven't bothered to learn what it is. I know people have made a ton of money in it, and I know it's like one of the most actively traded names on Robinhood. What the hell is IREN?
So Iron and Cipher, you probably heard of CoreWeave, because CoreWeave is
it
sort of
Iris Energy or not?
That was their original name, and now they sort of just go by Iron.
Okay.
So CoreWeave has been one of the most successful IPOs just in the last year. They IPO'd like last March.
Yeah.
And they were seen as another AI play, data center play. But the funny...
I knew that one was going to work because of how bearish I was on it.
Came out at 40, went to like 160 or something.
I was about to look at you so sideways.
Yeah, no, I knew it would work because I hated it. All right, so what is this?
But what's interesting about them is that they're sort of like a middleware player stuck between the Metas and the Googles, the hyperscalers on top. But they actually don't own any of the data centers themselves. CoreWeave doesn't. Or they don't own the land. They don't have the connections to the power grids. They have to go to the Irons and the Ciphers or the Core Scientifics and do partnerships with those players to get access to those data centers. And so anytime they sign a deal with a big hyperscaler, they've got to turn around and...
Wait, IREN actually owns the data center and CoreWeave is leasing it?
They don't partner with each other, but I'm saying that CoreWeave, has to do deals with Iron and Cipher because they wanted to position themselves as we're asset light. We're
so somebody has to physically own it.
High margin. So we don't get into the weeds of owning that land. But it turns out that actually owning that land, having the connection with the local power authority,
Utility,
whatever
right.
utility, and at a fixed rate, by the way. Like that's critically important to, being able to deliver the kinds of gigawatts that now these hyperscalers
So this
need.
is a land or a facility owner?
So they buy the land in, Iron and in West Texas predominantly. They've got like 2 huge sites coming online where they actually bought the land. They negotiated the deals for the power consumption rates, and then they started physically building out the data centers themselves before actually then going to the hyperscalers and signing the
Making a
deals
deal.
with them.
Okay.
So they're kind of coming up from underneath of CoreWeave and almost like disrupting
Where's the
CoreWeave.
stock?
Holy shit! The
$50?
stock was like $5 in April. Now it's 67.
Yeah.
So I bought.
How long have you owned it?
I started buying it at $9.
Wow.
Do you still think it's gonna 100x from $9?
To from 9 to 900.
You think so?
So it's now at 70 something, I think, or something. Low 70s.
$18 billion market cap. And you think
All
it's
right,
got
wait,
another
hold on.
10x?
Don't interrupt the process
Yeah.
by which I make money here.
Yeah.
Cypher is the same thing?
Same thing, but smaller.
All right.
But the thing that's big about both Iron and Cypher is that, the reason why I liked them as opposed to a Core Scientific or some of these other players that are out there is that Iron and Cypher have 3 gigawatts in their pipeline that are going to be turned on or energized in the next 12 months.
Like it's under contract. We know they're going to have
So
it.
when you hear that Microsoft's saying, "Oh, we're going to spend more money on CapEx to build out more data centers," that's probably like 5 years away for them, right? Because they got to go out and they got to buy the land and build the data centers. So they're going to be looking to do deals with people that actually have access to the data centers now. So when I was buying it at $9 or Cypher, I was buying, just below $4. Like people were saying, "Oh, these guys are just like former Bitcoin miners. Who cares about Bitcoin miners? Those trade at a low PE and all this."
Is
kind
that
of stuff.
what they did though?
Yeah,
They
that's how they
transitioned from
started.
Bitcoin mining to this?
Yeah, so they learned from how they built out their data centers for running
All right.
Bitcoin
Hut
mining.
8 was a Bitcoin miner. Is it still?
It is still,
okay.
and it has a new partnership with
This
the
is
Trumps.
HUT, guys.
Yeah. So they partner with there's a new ticker called American Bitcoin where they own 65% of it.
I
the
only buy
Trumps.
American Bitcoin.
And so Eric Trump and Don Jr. are kind of JV partners with them in that. But their basic Hut's main business is similar to Iron and Cypher, where they're building out all these data centers.
So
as well,
you like
looking
this?
to do
You like
deals.
this theme because
It's basically the energy shortage theme.
Okay.
That like there's not enough to power all these queries for ChatGPT.
Okay. Sana Biotechnology, SANA. This company is working on a cure for restless leg syndrome, I'm told.
Type 1 diabetes.
Same shit. All right.
So
This is a 100 bagger?
it's
A
a one,
biotech?
It's a $1 billion stock today. So to go to $100 billion,
That's a lot.
they would have to prove, they've basically shown that they've taken a stem cell approach to kind of developing drugs. And the first application of their particular approach to stem cell research was in type 1 diabetes. And they had good animal results, but just earlier this year, they showed in a very small handful of humans, basically they cured them of type 1 diabetes. So type 1 diabetes.
Cured, not treated.
Yeah.
Cured.
To this point where
Okay.
what they developed was able to help these people develop the ability to produce more insulin, which is what goes away, which causes type 1 diabetes.
Who do they have a partnership with in large pharma? Anyone?
No, nobody yet.
So that's a big catalyst when that happens, right?
That and also they've got to go through the
rest of
process
the clinical
of
trials.
showing like on a bigger scale and a human scale.
What does Feuerstein tell you about it? Does he like it or
Who? First, no, I haven't spoken with him. I've spoken with others, and one of my sons actually has type 1 diabetes. So,
Oh, wow.
like I've been, so I've seen firsthand like what it's like, and 100 years ago, I mean, anybody with type 1 diabetes would be dead basically within a few months. So it's a huge market opportunity.
I like that one. I want to make sure we get to the rest. BTQ Technologies.
So it's a quantum play.
Next.
It's post-quantum cryptography. So basically, if you, everybody else out there is sort of building quantum computers.
Post-quantum?
So the thing about quantum.
Buy it. What's wrong with you?
So last January, Jensen Huang said, "Oh, I think quantum is like 30 years away, right?" And now everybody's saying, "Oh, actually," including Jensen.
Well, he created an uproar with that.
Yes.
And then he's like, all right, sorry.
And it was self-serving too, because guess what? Like if a quantum computer really was developed, a QPU would displace GPUs that Jensen sells as kind of the new kid on the block. So You have these like small little startups like IonQ and Rigetti trying to build their own
This
quantum
is even
computers.
smaller than those.
Well, they're trying to be you'll like this. They're trying to be the CrowdStrike for quantum. So
Ooh.
they're basically trying to prevent a quantum attack, because why would you want to prevent a quantum attack?
Oh, it's
Because
a cybersecurity for the quantum
a
age.
quantum computer could hack into everyone's crypto wallets and basically steal all the.
The only way to
Bitcoin and
fight a
stuff.
quantum computer is with a quantum computer.
Right.
We all know that.
So
okay.
so that's what they do.
All right. We'll check in on that a couple of years from now. DeFi Technologies, DEFT.
Yeah, I've been in this one a year and a half. Started their core business is they basically sell ETFs for crypto all in Europe, and so not kind of a slow growing, not exciting business, but they are just now getting into using their knowledge of how they can create these kinds of crypto related instruments and get them listed on exchanges. So they're actually trying to tokenize all the sovereign debt in the world, which hasn't been tokenized as yet. So it's a super small market cap company, super big ambitions. Maybe it'll work, maybe it won't. It's obviously like a big asymmetric payoff
I
here.
don't think it's going to work.
Last one.
They have the knowledge and ability to kind of do it and going after it. So that's why I
You
like
say Ether and ETH Adjacent Scaling is a company called ETHA. It's just a public company. Is it a treasury or it's something else?
No, this is just the ETF, like the BlackRock
Oh, this is the ETF.
for ETH.
Oh, ETHA is the ticker.
Yeah. So it's just a bullish bet on Ethereum.
Why not just buy Ethereum? Why buy the ETF?
Well, I would say like wait a month or so, and there's going to be a Gen 2 treasury stock hopefully trading called
that'll be yours.
EMJX,
All
which
right.
is mine, which will be multi-asset, including Bitcoin and Ethereum, and some other Carvana coins that will be part of our treasury.
We'll have you on. We'll have you on to talk about that. I guess the question is, would you like to hire me as your business manager? Well, let me pitch you the idea first. This is like
you're gonna get me into merch.
No, we're gonna go so far beyond merch. You know how we're like in this moment where the more extreme version of something is the one that wins versus the more moderated. Look who we just elected mayor.
Trump.
Trump too.
Yeah.
Both sides. It's just whatever is the loudest, most extreme, craziest shit that people would normally be like, that'll never happen. That's the thing that happens. Like the craziest outcome is the most likely. That's what most people, when you talk to people on the street, feel about the world that we currently live in today. There are some like scientific reasons for that, including the internet and just the ability to amass huge followings for things that stand out. So, all right, we all understand that concept. You could have like the first meta meaning like almost like ironically, like an in-joke. You could have the first meta active ETF. We literally call it lottery. And no, but you see your reaction? This is the problem with people today. No, you see your reaction? That's the reaction I want. Guys, my new active ETF, it's a collection literally of lottery tickets. Get long this thing with money that if it goes to zero, you don't care. If you got 1 million people to put $1,000 into this, you would have one of the biggest active ETFs in the world. And that could be your base of capital, the way that Buffett has insurance premiums and different people do fund of funds and they get consultants to send them money. This is how I get money for my ETF. I tell people it's literally a collection of lottery tickets. Some are zero, some are 100 baggers, some are 500 baggers for all I know. But this is explicitly what I'm doing.
Yeah, no.
Don't you think that would be a hit?
Yeah, I think so. And
the SEC doesn't care right now about that, I feel like.
Well, I don't think there's anything wrong. It's a venture capital model applied to public stocks.
Yes, and you're telling people you're probably going to blow up.
Look, if I have 10 investments.
It sounds like he's on board.
I'll make the case. If I have 10 investments, okay, and one is 100 bagger, and the rest, a few like keep their value, and a few
go up a little bit,
7
but not
go
that
to
much.
0, which never happens for public stocks. I'm still sitting on a 10x in my portfolio from my 100 bagger in one position, right? So that's the value of slugging percentage.
But you need one. But you need one of those. But you do need one of those.
Yeah, and the critics will say, "Oh, but like Carvana was a fluke, and it'll never."
Prove them wrong.
How often can you find a 100-bagger? So I remember I tweeted at one point, I was like, I anticipate or I hope to find one of these 100-baggers every six months or something, and people were like, 6 months? Come on, who does this guy think he is?
That is insane.
Yeah,
100-bagger every 6 months.
How many do we have now? Like we've got it. Like,
well, I don't know how many
companies.
How many companies ever 100x from single digits? It's got to be a tiny number. It's not a big number.
No, and it's getting harder and harder the more the OpenAIs of the world stay private. Like
Yes.
it'd be easier in the 98, 99 when the Globe.com was IPOing with no revenue.
But what I'm saying is like people are willing to look. We see people doing 0-day till expiration options in record numbers. People are doing lottery tickets already. They're doing more sports gambling than they are retirement investing.
Right.
So we can't change the world. We can feed the public what it wants.
I mean, that's one thing I'm trying to do with this whole rising dynasty thing, like and communicating with this middle class, open army folks that are following is it's like, don't waste your money on these sports betting. Don't. There's so many ways. Zero.
Yeah, waste
zero
your money
DTEs.
on my penny stocks.
So, zero DTEs. No. Carvana good, Opendoor good, zero DTEs and sports betting bad.
Okay.
Is sort of my message.
So you're telling people, all right, I get it. You're going to gamble because you're middle class and you don't see a path to yourself.
But they're telling
wealthy.
me they're doing this anyway.
That's right.
I get so many messages from people saying, hey, I'm an electrician, I'm a pipe layer or whatever. I had a guy who's like a painter, like he paints houses and stuff. And he was saying like, I spend 3-4 hours a night studying stocks. And we had a debate about
is that your painter?
We talked about
plumber.
We talked about post quantum cryptography in this BTQ.
Yeah, it must have been a fascinating conversation.
And he knew more about it than I did.
Before we wrap, so if you were to launch the lottery fund, okay, and I'll just give that to you. You could just have it.
Yeah.
I want a board seat. All the traditional media, this is the top. Barron's, Financial Times. They would point to you. This charlatan is selling people $1 in a dream.
Grifter.
You know how much money you would raise because of that negative press in today's day and age? The press doesn't even understand that it works this way. We understand it.
I had a coffee with Tim Sykes. You know who he is?
Sure.
A few months ago here in New York, and he was like, "You got to. This is great. What's happening with you and Opendoor? You got all these haters. You got like Martin Shkreli coming after you and all this. It's perfect. You want that. You want the energy because when the energy is there with the positive and the negative,
strong feelings.
It's people are paying attention.
They care.
They care.
All right, dude. I wish you luck, pal. No, listen. I wish you luck. I think you cut me off again. This is going great, guys. I think what you're doing is super interesting. I love it. I love that it's working for you. I hope it keeps working for you and your army. And I'm a fan of yours personally. And to see you finding professional success doing something this much fun, I feel like it's cool. So
I appreciate it.
If I've ever given you the thank you guys. If I've ever given you the impression that I don't think it's cool, that's not the case. I'm rooting for you.
No,
I am.
It's all good.
All right.
Yeah,
How do you feel?
No comment.
No comment at all? This will end in tears? You could say it. One of us should probably say it just to hedge the show.
I mean, I think a lot of this shit is nuts, but I hope it works.
Well, it's working
He's saying
so
it.
far.
Yeah, good. It is. I hope it continues to.
A lot of the stocks are nuts, or a lot of the philosophy.
The post quant. You lost me at post quantum. I hope it works. I want people to make money, so I hope it works. I hope Open goes to 81, 89 because that would be the funniest thing ever. I'm kidding. I hope it goes to 82.
All right. Now, we always end the show by asking people what non-extradition country they're planning to visit when their portfolio blows up. What are you thinking? Panama? What do you got in mind? Dude, what are you looking forward to? Tell the audience.
Well, I'm
Drake finally buying the stock.
I'm looking forward to the Open 82 party in Vegas. So now that's become like a meme unto itself, and like people have made AI videos.
What is this?
People want to have a party when Opendoor hits $82 a share.
Oh,
and then they were debating, should we do it in Tokyo, LA, but Vegas won, and then so somebody I got on Sora or one of these AI video generating sites and created like a video of like Drake and Eric and Keith Raboy and like all these people. So,
yeah.
I think that would be pretty cool. People have told me like, well, I'm flying in from Antarctica. I'm flying in from Mongolia.
The party will
I'll tell you
how it's actually going to go. Drake is promoting Stake, which is a gambling app. Drake is not afraid of controversy in any way, shape, or form. He actually courts a lot of negative attention, especially these days. He thinks he's a supervillain. Drake is going to buy the stock, and the party's not going to wait till Vegas at 82. It's going to be in Toronto. And I feel like that's going to be your, if you can make that happen, even if the stock doesn't go to 82, I feel like you'll still be pretty satisfied.
You guys will be invited.
And then your kid gets to meet Drake, and it all comes full circle. All right, dude, rooting for you. I'm afraid for you, but I'm rooting for you. And I hope everybody can make a lot of money. All right, that's it for the show this week. I want to say a huge thank you to John, Duncan, Nicole, Rob, Chart Kid Matt, Sean. We've done some incredible, Daniel. Who else am I leaving out? Graham, Keith. We've done
Travis.
Travis. We've done some incredible work this week on video. Guys, Animal Spirits on YouTube every week. Hits so hard. What else? Ask the Compound has been good lately. It's always good, but especially good lately.
Yep, taking off.
Yeah. And last thing I want to tell you about is the ownership channel. So we have a lot of markets conversation on the Compound. The ownership channel is about what wealthy people or business owners or founders or employee shareholders of companies actually do with their money. Not trading, but really more about just the process of being wealthy, becoming wealthy. What are the right things to do? We have an awesome interview up with John Chaffetz from Timberlane. If you haven't checked out the ownership channel by Ritholtz, now would be a good time. We'd love for you guys to watch it, give us some feedback, tell us what you think. All right, that's it from us. Thank you so much for listening and watching. See you soon.